The real basic question is what makes the market rise? Or for that matter, what makes it fall? For years, I looked for an edge. You know, the edge. How do you get ahead? How do you second guess the market? How do you get behind something that's going to move? And like so many others, I assumed it was all about the study of companies. It's a fair assumption, right? The company's value rises, so its stock goes up, right? This is a fair assumption. In fact, this made even more sense because we're inundated with this concept of valuation. You got value investing. You've got books on the subject all over the place. You go to a library or a bookstore in the financial section, it's all about company valuations. I even studied public balance sheets hoping to find the secret key. It's all about earnings, or so I assumed. I even tried following Mad Money Kramer, who's constantly talking about valuations. You can't watch his show for 5 minutes without hearing this company's this company's that, balance sheet, cash flow, on and on and on. Now, I went ahead and traded this assumption many years ago. The companies that had great prospects, I'd buy into them, and lo and behold, they would fall. How could that possibly be? It just wouldn't work out. And so my account lost tens of thousands of dollars. Way back in the year 1999, 2000, I started with 50,000. It just went down and down and down. This is a reality. And to a lot of you, this might sound familiar. Then one day, it hit me. The stocks are driven by speculation and nothing else. Nothing else. Now, what is speculation? Well, speculation is to estimate or guess about what something will be worth in the future. It's that simple. You know, you own some property or some real estate. People will speculate on that, right? Like, what's it going to be worth next year? Stocks and commodities are driven by speculators, not what is, but what people are guessing that will be. Now, this flies into the face of all conventional wisdom, believe it or not, because, for example, I've heard many analysts complain about the volatile oil and gold prices, saying, oh, well, those are just driven by speculators. And I think about that, I go, well, duh, of course they are. Everything is, including the very things that they're speculating on, the very analysts that complain. Because, you see, it doesn't matter whether it's a day trader, a swing trader, a long-term investor, or an expert analyst. It's all speculation, and it is never anything else. It is a bet on the future appreciation or depreciation, period. An investor who claims he's going on valuation, isn't he betting that the value is going to be greater in the future? That's his whole bet. So all markets are driven by speculators. You know, on the floor of the commodities exchange, they're all yelling and screaming, trading prices, speculating. Speculation trumps so-called valuation for a few reasons. Number one, well, not a few reasons. It's because it's a fact. Nothing happens unless it's speculated on. Now, I'm going to show you an example here. This is the NASDAQ back in the tech bubble versus the drug index, drug sector. Now, why am I showing this? Because this is a perfect example of where speculation trumps valuation all day long. This red line here, see that red line is the NASDAQ. Notice this is from 1999 to about 2002. See how the NASDAQ ramps up to this peak level right here during the tech bubble. The drug sector, which is high here, falls way down here during that bubble. Notice that the drug sector is way down here. The NASDAQ tech sector is way up here. This went on for almost a year. Now, why is that significant? Because if anyone who studies actual valuations, the drug companies are far more profitable than the tech companies of that era. There were a lot of companies that weren't even making money at all. And yet the speculation of them ramped them up into infinity, whereas they all sold off the drug stocks. Now, as push comes to shove, the NASDAQ bubble burst, and that's what you have right here. And then they all start jumping back on the drugs. And of course, it also crashed because the whole market crashed. The point is that at the end of the day, if you're a long-term investor, quote unquote, if you bought in here and held to here, you'd be even, you'd be flat. Why? Because you think that you're betting on some kind of valuation increase, but nothing happened. However, if you were a good trader and knew what you were doing, you could have jumped on the various bandwagons, long and short, and made money in between. The point is that speculation trumped valuation for several years in a row. And that's the key point. Okay, so then what is the Holy Grail? Okay, we've established that it's all about speculation, but what's the Holy Grail? And that's where we get interesting. Remember, the market's driven by speculators, all right? So what does that mean? Does that mean you become one of them? Believe it or not, the answer is no. And here's why. Because you have to speculate on them. And what I'm telling you is the keys to the kingdom. When I finally got this point of view, everything changed for me ever since. I've been able to do well. I've been able to consistently do well. I've been able to hold my own all throughout the years, just knowing this one principle. The Holy Grail is the art of speculating on the speculators. Now, I'll give you a few more notes on this. The thing is this. The speculators are driving the market up and down. However, you have to speculate on them to decide what they are going to do, and that's the key to trading. The reason you speculate on speculators is very simple, as opposed to becoming a speculator. Thousands of people who are speculating know more than you do. You know, I cannot emphasize this enough.